Thank you, everyone. I said to myself, I'm not going to mention the 600 million people at all, or the $70 billion per annum that we need to change the shape in Africa just in energy. So by saying that, we will definitely have a very exciting discussion today. I'm not the expert, but I'm joined by 3 experts today. So I want to invite Marcel, Alberto, and Tente to the podium, alsjeblieft. I had to bring in an Afrikaans word because you're in such a beautiful part of our country. So welcome all of you. Can you all join me? Tente. Thank you all. I want to start by just mentioning to you the importance of the sector on the continent. And again, at Standard Bank, we believe that it's not about only one technology or one solution, but especially our presence countries to understand through having a deep sector knowledge, flexible opportunities in flexible technologies. And how do we unpack that? I first want to ask my panelists just to do a brief introduction of the companies they represent. You will see we're trying to cover a bit of different worlds that we touch as a bank. So I want to start with Marcel and then go to Tente and to Alberto. Thanks, Marcel.
Thanks, Brenda. I'm Marcel Brühwiler. I represent the International Finance Corporation, the private sector arm of the World Bank Group. I'm working out of Joburg and covering infrastructure investments in Southern Africa.
Thanks, Marcel. Tente.
Thanks, Rensha. My name is Tente. Second name Tente, middle name Tente. I don't know what I've done. For my sins, I find myself amongst the financial experts. By profession, I'm a civil engineer and currently the Chief Executive of the Lesotho Highlands Development Authority. Thank you.
Thanks, Alberto.
Thank you, Rensha. My name is Alberto Gambacorta. Scatec is a renewable energy solutions company based out of Oslo in terms of headquarters, listed in the Oslo Stock Exchange. We have developed, built, owned, operated, and we are in the process of structuring about 7 gigawatts worth of projects. PV, wind, BESS, hydro around the world, and I'm happy to report that more than 50% of that is actually in the African continent.
Thanks. So I want to start with kicking off this conversation. It's not only about energy transition, it's about energy security, access to energy, and actually making a meaningful impact on this continent. And as we said, it unlocks so much more. So I want to move to Marcel first. I mean, the IFC has played such an important role, not only in our presence countries, but across the continent. Can you give us a sense of how far are we actually down this line in terms of unlocking opportunities in energy transition, and what does it mean for the continent?
Well, in short, progress still leaves much to be desired. You mentioned it in your introduction, Rensha. The number of people without access to stable electricity on the continent has been on the rise, actually, in recent years, which is pretty depressing. And it's basically still the same old story which hampers investments. It's the combination of lack of cost-reflective tariffs, ailing utilities, some of them even with negative operating cash flow, very high transmission and distribution losses, and these in situations where, you know, there's also some countries have surplus power generation, and the wires are not keeping up, so the power cannot be evacuated, to the extent that now even Bitcoin mining groups are coming and say they want to use the power to mine Bitcoins when the country only has 40% access to power. So I don't know. It's not the environment where private sector really comes and invests. And so the only really thriving markets for private investments in the power sector, frankly, South Africa and Egypt. You know, in the rest of the continent, not that much is happening. Now, you mentioned from generation to distribution to, well, transmission to distribution. We had, I think one has to say, experiments with private distribution on the continent, Uganda, Cameroon, and Nigeria. All of those private utilities are failing, but frankly not because of the fault of the private sector investors. There are policy issues, there are political economy issues, and there's also the government part who is not really coming up to their side of the equation. So all of that is pretty, well, not really encouraging. Now, what's the green shoot here, right? The green shoot is that technology, and I'm sure we're going to hear more from Adalberto, technology offers more than just grid-connected power. About half of the unelectrified Africans need to be connected through so-called distributed renewable generation. So this is your solar home systems, your mini-grid, but also your commercial industrial PV, which the government has much lesser role in. It still requires enabling regulatory framework, but much more direct control of the investor to get into that. And I'll speak about that a little bit later, but I'll stop here for now.
Thanks. I just want to quickly latch onto one of the questions of one of the issues you raised. I mean, it's the importance of government regulators creating enabling environment. To what extent do you find the role that you play in some of these countries as key? Is it positive? Do you need more assistance? Do you need partners?
Is that a question to me?
Yeah, sorry, Marcel. No, it's a follow-up in terms of you framed some of the challenges around the regulatory enabling environments, governments, unbankable utilities. So the question is, how do you navigate through that, and what role does the IFC play in unlocking some of those challenges?
Yeah, so you have mentioned Mission 300. So Mission 300 is an initiative launched by the World Bank and the African Development earlier this year in Tanzania. And this is, for me, a really positive momentum. So 12 countries across the continent have signed so-called energy compacts, which are short 10-page documents which outline the reform agenda to allow for more private sector investment. It's not only private sector investment. We also need stronger utilities, public sector utilities who can run transmission grids, distribute power, or last mile distribution in the cities. But quite evidently, the capital required on the continent in the electricity sector cannot come from public sector. The official development assistance is a drop in the ocean. There is not that much around anymore. And it's getting more and more difficult to find donor funds in a new geopolitical environment. On top of it, as we know and as we heard from the government, fiscal space is very limited. So this Mission 300 and these energy compacts with the countries, I find quite encouraging. I also realize, or let's say my public sector colleagues in the World Bank and also in the African Development Bank, they have more and more realized that in order to make progress in the electricity sectors, they need a counterparty who can implement. With utilities, many of them, frankly, being largely defunct, they lack that counterparty. So they need to now find ways to electrify Africa through the private sector. And so this gives us more momentum than we had ever before, I believe, for the next decade to really make progress.
I agree. I'm also excited about Mission 300. I want to move to you, Alberto. I mean, Scatec and the track record on this continent is unbelievable. I mean, it's just for Standard Bank, it goes back more than 10 years. And I think if you look at the meaningful impact the projects have, not only in this country, but in other countries as well, can you give us a sense? And I think many of the audience members today don't fully recognize or know the names. So maybe give us a sense of what you've achieved as a company and how did you manage to do that? Thanks.
Thanks, Renche. So I know this is a crowd that likes numbers, so I'm going to use a few numbers here. Let me start with the second part of the question, which is why Africa? Why and how did we move here? Well, we started off as a startup, pretty much, in Norway. And there isn't that much sun in Norway, so you can blame it on the polar nature or polar explorer nature of Norwegians or the executives that have some experience in oil exploration, oil and gas exploration in the continent. But we very soon had to make a decision. Where are we going to use our capital? Where are we going to deploy our capital? These projects are capital intensive. And we make very quickly a decision to move into high risk, high reward markets. And these are the emerging markets. So we sold all of our assets in Europe, almost all, in Europe and the US. And then we decided to invest in this continent, starting from South Africa, where we participated in the first REAP project, and we were awarded our first project, the 75 megawatt Kalkbolt. And there on, it's been a story of successes both in South Africa, Egypt, Rwanda, Mozambique. I'm sure I'm leaving quite a few out of the picture, Tunisia, and then later with the acquisition of SN Power, even hydro projects in Uganda. And then smaller projects like South Sudan with our release projects, or Cameroon with their release projects. And this amounts to roughly $3 to $4 billion in investments. Now that's a good 600 to 800 million in equity and about 3.2 billion in financing. And this came through both commercial debts or blended finance, including the IFC. So this is a story of about 15 years of development and construction in the continent. Now, why did we choose to move to Africa? Well, it's partly DNA, as I just discussed, and also fundamentals. We heard it before. To power the growth in the country, in the continent, you really need a lot of energy. So the fundamentals looked really good. Just in South Africa, we're looking at a 50 to 70 gigawatt opportunity in renewables. That's enormous. The third part, I think you touched upon that, Marcel, and it's regulation. We found a certain level of policies and rule of law, which is conducive of developments and construction of these assets. They need to live for 20 years. They need to have power purchase agreements that have some sort of government backstop. There's some sort of policies that are conducive for these assets. And here we found, especially in South Africa, with the repeats of the REAP program, the Battery Energies program, the risk mitigation program, we found it conducive of us developing our first solar projects, the first hybrid power plants, to date still the largest one in the continent, the first redeployable leasing solution for the UN refugee camp in South Sudan, and now also with the utility in Cameroon, as well as our first trading and aggregation platform in the continent, which is our Lara project. Then, of course, to enable all of this, we needed capital, and that's with partners like Standard Bank and the IFC. I think we always say in the company there's never going to be shortage of capital for good projects, and that's been true for us in Africa. So deploying those $4 billion between equity and debt, it has actually happened because we had robust projects and robust frameworks behind them. And then the human capital. I'm happy to report that our office in Cape Town is larger than the one in Oslo. We employ about 300 people, and we serve our operations globally. So this is as much an African success story as it is a Norwegian success story.
Yeah, I think you've mentioned a very good point, and I always say when we are challenged for bankable projects, the capital will come if you have those projects ready, and I think Adil mentioned it on his panel as well. I think what we do need is more patient development capital, more patient equity, because sometimes it does take just too long to get the projects to the point where we can actually proceed. And I'll get back to how do we get across that hurdle just now, but I want to move to Tente, and it's so interesting when we talk about Lesotho Highlands Authority and what you've achieved there and the experience. So I want to ask you just to share also some numbers with the audience, because when you and I spoke, it was like blown away. It is unbelievable. It also took quite a bit of time, but you managed to get there, to navigate through the process. So maybe share that winning formula with all of us.
Thanks again, Ranshia. I think maybe to provide context, I need to explain the geography first.
Yeah.
Because Lesotho is right in the belly of South Africa. So you need to understand that if you have something in your belly, you have to nurse it around, otherwise you will have problems. The Lesotho Highlands Water Project is a result of what we call double coincidence of needs, where if you look at the Gauteng region, the Gauteng province, Gauteng in Sesotho is gold. It's a city of gold. Usually, right around the world, before a city can be established, you need to confirm the source of water. In the case of Gauteng, that was not the case. The gold determined where the city needed to be, and the water had to follow the city. That's what led to the Lesotho Highlands Water Project, as the industrial sector needs in South Africa were rising and the household needs for water were rising. Then South Africa needed to meet those demands. On the other hand, Lesotho was looking for opportunities to earn revenue and to be independent in energy production. So hence the double coincidence of needs. So you asked me about the winning formula. I'll mention quite a few, but it's not limited to only those that I will mention. One of the first one is collaboration, because the rivers emanating from Lesotho flow through a number of countries, and critically, let's mention the Orange River, which flows through the riparian states, being Lesotho, South Africa, Namibia, as well as Botswana. So that respect for the rights of the riparian states is one of the critical success factors in this formula. And when the treaty was signed back in 1986, there were clear objectives and responsibilities codified in that treaty, which clearly defined the institutional arrangements as well as presentation in terms of settlement of disputes. So we often refer to the treaty because it came at a time when Lesotho was under the military rule, South Africa was under the apartheid rule. So it survived a number of changes in government in both countries. So often we refer to the Lesotho Highlands Project Treaty being well ahead of its time, because it's still valid even right now, it's still relevant right now. The other key success factor would be the rules of engagement. The bilateral organization between the two countries works more on consensus basis, not necessarily on a financial muscle that one country has. As we can imagine, Lesotho versus South Africa, that wouldn't work. So the decisions are made on the basis of consensus. And for ourselves as the LHDA, as the implementing agent, our decisions are based on technical requirements, because we are supposed to remain neutral and not favor either of the parties. The final one, like I said earlier, is the settlement of disputes. Really, it's willingness to engage the mindset of win-win versus win-lose situation. There is always no beaming victor or no bitter loser. There is always an effort to strive for more common destiny, common goals that the two parties are striving towards. And the project has been into being for almost 40 years. We'll be celebrating our 40th year next year, and we've never been to arbitration or any of that. Many countries across Africa where there are shared rivers and the likes have been to Lesotho to try and find out about this particular winning formula that you're asking me about. Thank you.
Thanks, Tente. I just want to follow up, but I mean, reaching this success now and 40 years, what next? Do you have a plan? Do you have more opportunities for all the investors in the room? What?
Yes, indeed we do. Like I said, we are a special purpose vehicle, like our sister company in South Africa here, which is meant to implement those projects in the water sector that are able to be financed off the government balance sheet. So the government takes care of social programs and we deal with the capital ones. So there is opportunity in that sector. We are currently in the second phase of the Lesotho Highlands Water Project. It has two components. The one component is for water transfer to Gauteng, and South African government is fully responsible for funding of that particular component. Currently, it's projected at 50 billion rands, and the other component of phase 2 is in the energy sector, where Lesotho is supposed to implement another hydropower project costed in the region of about 30 billion. So we are currently involved in about more than 80 billion rands situation. What's coming further than the renewable energy that I was speaking about, the hydropower, is also we are venturing into the space of solar farms, because we have all this water surface providing an opportunity for solar panels to be placed on that unused water surface. So there are other opportunities for investors. So for me, I'm saying watch the space. There are lots of opportunities to invest in this. And what we're using is a model of PPP, public-private partnership, where we're looking at several blends and mixes in terms of funding that's available. Currently, the water transfer component, what we have the DFIs as well as commercial banks funding the 53 billion that I spoke about. The 30 billion that's coming, we're still out in the market searching for potential funders for that.
Thanks.
Thank you.
Thanks, Tente. I see. I want to come back to points that have been made and raised quite a few times today, and that's government support, government commitment, whether that's through funding or guarantees. We know most of the sovereigns in our presence countries and across Africa are actually under pressure. We know that it's not only about generation, it's about transmission as well as distribution. And I want to bring it a bit closer to home and what we're currently experiencing here. And I think the conversation when you talk about energy unlock and the role of transmission is absolutely critical. And it's not only an issue for a specific country, it's a regional unlock, it's a regional story. And I think part of Mission 300 that Marcel referred to tried to facilitate that. I want to Marcel, ask you around, and the Deputy Minister mentioned that as well, this guarantee structure and support to sovereign, to crowding private sector, private funding. I mean, we've seen the reduction in REAP guarantees from government. We know the sovereign is under pressure. We know that transmission is becoming absolutely critical to unlock more generation. Can you maybe just touch on the role that the IFC play in facilitating and unlocking some of those markets?
Right, so this credit guarantee vehicle, and Deputy Minister Masondo has mentioned it, we're working on this with government as the World Bank Group. So, but let me start by saying such a vehicle, which would relieve the sovereign from providing a backstop to investors, is only a temporary product. Eventually, South Africa needs to transition to a national transmission company, which is bankable on itself. There's a regulatory framework on which, you know, lenders and institutional investors will invest because they know the revenue of the national transmission company in South Africa is regulated and is secure. Now, we're not there yet, and we need to further liberalize the market. So in the meantime, because fiscal space is very limited, there is this project of this credit guarantee vehicle, which is a blended finance vehicle, which is capitalized by junior equity and senior equity. Junior equity partially from government itself, but then also from concessional funders. Now, there lies the probably biggest challenge, to find enough concessional funds so this guarantee premium which the vehicle will charge is competitive and attractive enough. And in today's world, that's not easy. Although, as far as I'm concerned, the narrative, which is an energy transition narrative, you know, to build more renewables, to gradually decommission coal, is still a narrative which in at least some parts of the world is being heard. So I hope that we will get this together.
Absolutely. I'm very excited about the opportunity and the need to work together. I want to move just quickly. I know we've got a few minutes left, and I want to touch on this whole liberalized market that we see developing in South Africa, and it's something that we as a bank are extremely excited about. We do believe that you're going to see more and more of an open market access across many of the countries we're currently present in, and we've seen it in Namibia, we've seen it in Zambia, we've now seen legislation in Kenya opening up, but in South Africa, it's been quite a trajectory in terms of fast-tracking the development of CNI and opportunities around that. I want to move to Alberto and the role that Scatec see and the opportunity in this change in the market. I mean, we do see that there's still an emphasis on government procured programs, and a lot has been said about REAP, which we've been very active in, but more so lately with the regulatory changes, opening up the opportunities for traders, aggregators, multi-market, many-to-many view, mentioned it as well. How do you see that for developers and growing your opportunity set?
Thanks, Rich. It's only 2 minutes. It's going to be very difficult, but I'll do my best. So if we look at not just South Africa, for instance, in Egypt, we have our first ammonia purchase agreements, for instance. So we're not just supplying electricity, we're actually supplying ammonia or hydrogen to the off-taker. And in South Africa, with the aggregation platforms and the trading and the liberalization of the market, you will see more and more of this type of opportunities where you are going to have off-takers coming to you for a certain volume, a certain profile, a lot of flexibility. That's the word that we'll see more and more coming up. You'll need to serve them with a certain time of use. You will need to provide to them a certain level of security of their supply. At the same time, you'll need to work together with the transmission company and the distribution companies to make sure that the grid is balanced. So the liberalization is coming probably a bit late in South Africa, but it's a good thing that it's coming because we're going to need a lot of that. And the opportunity for companies like ours, it's enormous. You have a market of off-takers that is in the tens of gigawatts. You have opportunities in the wholesale market that we see in other markets where we operate, like the Philippines, where we operate purely on ancillary services, intraday markets, and that's a great opportunity. So this is all coming to South Africa. So it's not just the generation, not just the megawatt, it's the quality of that megawatt and the attributes that are attached to that megawatt. And remember that carbon tax and all the CBAM threat is actually accelerating that transition for many companies. So the opportunity is great. Of course, there's a lot of competition out there in the market, but that's the right thing that we want to see.
Thanks. I wanna ask my panel members, we've got a few seconds left. I know our time was cut short, but just a last concluding remark around what do we need to unlock more funding, more equity investment, and maybe more patience in terms of dealing with this massive opportunity. So let me start with Tente. You, in the middle, you've done a great project, got a great track record. What do you think?
I think for me, one of the things that is important is to think about sustainability. We don't have unlimited resources going forward. We need to think about the future generations as well. So if we can tilt towards renewables and the likes to ensure that there is sustainability going forward, that would be a thumbs up for me. Thank you.
Thanks, Tente. Alberto?
You mentioned collaboration earlier. I think there's a lot of collaboration. There's quite a lot of partnerships, like the one we've had with Standard Bank, with AFC. It's a great story. It's a great partnership. It's a great collaboration. To make all of this happen, it sounds easy, but actually requires quite a lot of work with institutions, with government, with regulators, and with the commercial partners.
Michelle?
One is the policy, and South Africa is leading the way. We need much more gradual market liberalization across the continent. And two is the little concessional funds we have left, we need to use much more strategically. We need to use them in order to mobilize much more private sector capital in the form of, through the form of guarantees, or junior capital, first loss capital, which then has a multiplier effect to get more private sector capital into the market.
Thanks. I couldn't agree more. Let's unlock, let's leverage, let's do more, and let's not only be patient, but try and fast-track the implementation which we need on this continent. Thank you for joining me and thanking the panel members. Really appreciate it. Thanks.